Hey, welcome back to Two Super Guys Trade Stocks. I am Dylan.
And I'm Vinny.
We're going to talk about a trade that Michael Burry initially did. Then he sold too early. I made a bunch of money. It's really my only way that I make money. And now we're going to try to make money the opposite direction, taking advantage of bonds and bond yields. So this is pretty interesting. We're going to take a look.
Two Super Guys Trade Stocks.
Boom.
Oh, yeah. Our old
What's this?
friends here talking about the inverse nature of bond prices and bond yields. Okay. It's a little bit complicated. Highly, if you're not used to this, maybe watch a separate video entirely about this. But basically, the yield is like you're discounting back the interest rate. So the price of the bond has to fall as the yields go up. Okay. And the reverse is opposite. Okay. Reverse is correct as well. All right. I know it gets really confusing because you're talking about things kind of going back and forth here. But the main lesson is that prices and yields are opposite of each other when it comes to bonds.
That's all that I know. I don't know anything beyond that, and it's still my most successful trade, other than shorting Nikola. So, obviously, if you watch this channel, we are talking about TLT, my baby. We are coming to a point. I'm going to zoom in and out of this, but we are coming to a very interesting point in the technical analysis here. Now, technical analysis, when you're looking at TLT, it's not like you're looking at a stock. It's not really the same, but it's a 20-year bond ETF. So as you can see, we are kind of coming up to a point at about 110-ish where we still have not passed above it. All right. Mm-hmm. When we zoom in closer, you can see we are doing higher highs and higher lows, but some stuff just came out, and it may actually give us an entry price. So when we zoom out, this is since like 2002. All right? Long time. You can see how high this was before COVID, before we generally, the average price between like 2012 and 2019, I'm taking out the COVID madness because that was kind of an anomaly. It was about like 135. So we have a pretty high price. It's a pretty high return. Bonds can't really stay where they're at right now. All right? Now, This is what Vinny said, right? So the percentage, the yields, as these go down, bond prices go up. Bond prices mean, in this case, TLT. All right?
Yeah.
Now, we hit 4 for like a little bit, dip below it. This is like 4.05. And then we drop down, and then like 4.1. 4, if you can get in this at around a 4% yield, that's a beautiful entry. It's just we can't stay above it. We just keep on falling back down. Vinny's going to describe some interesting aspects of this.
So, people kind of consider the bond prices to be like the smart money in the market a little bit. Bond valuations are really complicated, like mathematical formulas, but they kind of show us stupid equity traders, if you will, some interesting stuff. The inverted yield here, the reason why this is interesting is that you're getting a higher return on shorter dated bonds than longer dated bonds, right? Longer dated bonds should typically have greater risk, right? Because like there's a wider cone of what could be going on 10 years down the road than there is 2 years down the road, right? So there's more inherent risks there. So you should be getting paid much more in terms of the risk premium that yield for longer dated bonds, but we haven't been for several months now. All right. This is often seen as a warning sign for a recession. If you're looking at all these previous spikes here, the red portions where we're getting up significantly above this, like kind of even inverted yield there, you're seeing following these gray shaded sections here right after, right? These are all recessions, right? And we're not quite to the level that we were back in the 80s here when the last time we had like crazy inflation, but we're well above what we saw before the dot-com crash and the 2008 financial crisis. So there's a lot to be kind of optimistic here if you want to think about taking a long-term bullish position on TLT at this point, because the levels we're at here are unlikely to remain for a long period of time. Right?
Yeah.
So that's kind of the bullish thesis.
And just to throw out, it's so zoomed out, but this hit the inversion criteria in October. And I'm going to show you what that looks like on TLT because it's very clear what happened there. But to reiterate what Vinny just said. This is the worst it's been out of all of this, except for this 1980 period. Since like 1981, but we're also beating this like 1974 period too. So
Yeah.
it's not good. But bonds, they can't be where they're at forever. It's Apple is a safe investment, right? You can probably put money in that and it should go higher, but it could also pull a 2009 to 2015 and not move for 6 years. Whereas bonds, you should get a decent return because of how weird and crazy this actually is right now. Now we're filming this on April 8th. So April 7th, the market was closed, but because of the jobs report that was seen, the yields actually had their biggest daily gain. So we are going to be approaching, TLT is going to be approaching that 4% near it again, which could be a pretty decent entry. So these two lines is, I have this on my chart. You never know what's going to happen. In my opinion, I think 106 to 99, these two yellow lines, is a good place to scale in. It'd be a good place to add into a position of TLT. If it does break above this red line with some force, then it might be too late. You could add there, but your winning ratio or your risk to reward is not near as good. I do want to show one thing. So this crazy low, it was October. That was when we started the yield curve.
The inversion, yeah.
Yeah.
So previously you had played this by buying long-dated put contracts on TLT, like I said, inspired by Michael Burry. Is your thought that you're going to play this on the opposite by long-dated call options now? Is that kind of your leaps, if you will?
Yeah, if I had not gotten screwed on the options in the short aspect, probably yes. But I almost feel safer just doing shares.
Okay, so you're just going to buy into it. Okay.
Yeah, it's a safe investment. I think it's very possible that the market as a whole jumps around and is a chop shit show for like 2 years just because of all the weird damage that's been done. And I think TLT will probably outpace the market in terms of gains versus the SP 500 and the Qs. If you're watching this, we've already put out a video on how the SP 500, it's kind of unrealistic in the gains that it's put out, and I don't think it's sustainable. So I do think that this is a pretty solid trade. I don't know if I'm going to do leaps. If it drops down to 100, I'll do a leap.
All right, I got you. I was just kind of curious, just from like a logistical standpoint. It's definitely a very interesting, compelling trade, and I actually think that this may play out faster than you would think. Powell's very kind of cautious in talking about the bank failures and how that credit tightening as a result is going to have a much bigger impact on the U.S. economy than even like a rate increase. And JP Morgan, Jamie Dimon over there just came out with his annual letter last week, and he also talked about how the financial crisis or bank failures are not over, and that he does kind of foresee a significant financial tightening in terms of credit risk. And we're already talking about things that were extremely extended. See our separate video about housing costs, and we can do another one on cars if you want to. But you're going to be putting a lot of brakes on the economy very, very quickly over the next 6 months to a year. So it may play out sooner than you think.
Yeah, a 2-year leap would be what I'd be looking at. That's the only time frame that I would feel comfortable with. You pay a lot more for it, but I mean the safety and the theta decay protection is pretty huge. So
yeah. All right,
guys.
Think about it.
Yep. Give us a like and subscribe, and let us know if you're going to take this. Have a good one.
Okay, thanks.